let me bring to the show Philip Schreiber, Blue Line Futures. Phil, good morning. Do you hear us?
Yeah.
Good morning, and thank you so much for joining us. Phil, is the OPEC the only one that is driving the price action at this point?
Well, we did see a small oil spill off the coast of California, which should damage some of the supplies. Also, much of the developments with the oil, I mean, it is one of the best inflation plays. As we continue to see the curve of the Delta variant continue to decline, you're seeing much more need for travel. Business travel is picking up. You know, if you look at some of the figures coming out of the airlines, more and more business travel is picking up. So I believe that the demand is there. The supply is not continuing to increase, and that's driving prices higher.
What kind of demand and supply dynamics do you expect for the final quarter of the year?
Well, as long as we continue to see the EIA draw down inventories, when we look at the 1 year versus the 5-year average, they've been in a steady decline all year and all season. And I believe that there's just too much pent up demand for people to start to travel, and people that are, you know, now is the first time that in the US I'm hearing more and more colleagues, friends, relatives all traveling, not only within the United States, but outside the United States. So I really believe that that demand is coming back.
What's your take on the natural gas, which is a major story, at least here in Europe? We have major power surge, of course, gas prices, which are surging to new all-time record highs here in Europe. So far, I'm showing, of course, the US prices at 5.98, once again testing the $6 today, is up about 3.79%. So do you think that this bullish trend is going to continue also when it comes to the natural gas market?
Yeah, we've been adding on any correction we can get on natural gas. You know, the CME, they've got a couple different contracts out there. The smaller natural gas, due to the increased volatility, appears to be the right contract to be trading. We're going out to the December contract because we believe that, you know, the supply crunch could last longer than initially anticipated. Normally you play the front month for any kind of supply squeeze, but I think you can go out a month or two out. We're really targeting $6.50 to $7 on the upside.
Do you think that Europe's power crisis might be spreading north?
Yeah, I mean, it definitely is. So we're starting to see, you know, a ripple effect where other countries like China came out last week and they said, hey, they told their energy officials, secure all supplies available and all energy needs coming into, you know, the winter season. So you're seeing all these other countries, they're trying to really buckle it down. The demand is constant, the supply is very limited. So it's another product, and, you know, it drives the CRB index, which is now, you know, moving up to new cycle highs. So the commodity basket, as far as an inflation part of your portfolio, is definitely well alive.
I was wondering, what's your view on the precious metals? I'd like to touch on gold and silver. Do you think that we're going to see higher valuations?
We need to see silver decouple from gold, break away. The gold-silver ratio had peaked at about 80. Now it's starting to travel back down. You're seeing, you know, silver prices act more as an inflation play. You need the other base metals, platinum, palladium, copper, all to start to get some kind of lift there. You need that, you know, the microchip, the semiconductor chip. You need that supply assembly, you know, to be resolved on the automotive side to get platinum breaking away. But gold really faces some headwinds because of higher yields. We're starting to see upside 10-year projections at 1.62%. Right now we're at 1.49%. If you get that bump up in yields, it's going to put some pressure on gold.
Yeah, I was wondering how important are the dollar dynamics for precious metals and of course commodities?
Now, I don't believe that the dollar is going to continue an upward trend. I believe that it's really trapped from about 92 on up to 94. I think that we've hit a temporary peak on the dollar. I think we're going to start coming back down, like 93.50, 93.25 would be a likely target.
Thank you very much. Phil Schreiber, Senior Analyst, Blue Line Futures. Thank you for joining us and have a great day ahead.
You too.